Last week, European leaders agreed on a plan to reduce Greece's debts and provide it with more rescue loans so that the country can eventually dig out from under the burden. In a global economy, what's the impact on U.S. farmers? Farm Director Al Pell looks for answers in this morning's analysis.
Chip Dellinger from the Blue Reef Agri-Marketing is going to fill me in on what really happened in Europe this last week.
Well, I'm certainly not an expert, but my take on the European issue was they did put a temporary Band-Aid on things. And that's really what the financial market wanted to see. We saw strong rallies in the financial markets to close the week out, both here and in Europe. But my fear is that going forward, they didn't give us a lot of answers. They gave us some headlines and made the market feel better for the short term, but they didn't give us a lot of concrete details on how they're going to do that. My fear going forward over the next several weeks is that if you get one or more countries kind of backing out of the deal or dragging their feet a little bit or more downgrades on any sovereign debt, that whole agreement and the good news we were cheering this past week could really fall by the wayside, and you could see a whole nother wave of liquidation and problems out of Europe.
There's been all sorts of analogies. People saying it's kicking a can down the road, putting it off and all this kind of thing, and having another meeting next month because we like the food and that sort of stuff. And do you see some of that continuing? You do, you're saying with your face.
I do. And I think, unfortunately, the bottom line is they're trying to prevent the market from clearing itself. And by doing that, it might put the problem off a little bit or kick that can down the road, but it's not solving any problems longer term.
The question in every farmer's mind is, will what's happening over there, come over here? It's already affected our prices, and will it get to us in the United States?
Yeah, I think it's all interrelated is the problem. The debt is so widespread throughout these investment banks and large banks across the world that it is here now. It is affecting us. And to clearly see that, if you overlay a U.S. dollar index chart on top of a corn chart, it is the exact opposite. So it almost is becoming its own fundamental for grains in the short run. And as a matter of fact, in weeks like we had this past week, where there's not a lot of grain news, the markets just take their cue off of the dollar. If the dollar's lower, you see a nice bid and a nice rally in the grain markets. If the dollar's sharply higher, you see the exact opposite, a lower move in the grain markets.
That's the markets. We'll be back with more Ag Day in just a moment.
Farming has changed. Markets are riskier than ever. For customized, focused commodity marketing, contact Blue Reef Agri-Marketing at 309-550-7213 or online at www.bluereefinc.com.